Hey guys, Matewar from the Linesman here, back again with another video, and I'm kickstarting episode 2 of our beginner education series. And in this episode we'll be talking about risk management, particularly the risk management tools myself and GW use when we trade. And I'll be running you guys through and showing you it through Bybit, the exchange, and also using TradingView as well. We like to use TradingView just because it's a much cleaner UI and there's more space for the chart as well. I do believe Bybit does integrate TradingView, but once again, compare this to this. It's a no-brainer. TradingView is free to sign up, so just go make an account there and you can navigate your way through all the different markets here, so stocks, futures, forex, cryptos, indices, all of them. Just type in what you need. Today we'll be looking at the Bybit chart on ETH, 15 minute. Just for educational purposes, I did create a new account just to take you guys through the process of executing an order with proper risk management. Today I'll be running you guys through the risk calculation. R divided by SL percentage equals required position size. Don't worry guys, we'll walk through each of the aspects of this equation step by step, and by the end you should be able to implement these within your own trading. Okay, so let's get started. So I had a theoretical long, okay, with the benefit of hindsight. So I had a theoretical long to these highs here, okay, and I can stop loss at the low. The first two numbers I want to bring your attention to is stop loss percentage here. Hold on, stop loss percentage here, 0.47%, the number in the brackets, and also risk reward ratio. Okay, note those in your head. I'll make this smaller. So let's say theoretically you just open a Bybit account and you put $5,000 in there. Say R, okay, so R, risk. That's how much you want to risk per trade. Say you wanted to risk 1% of your account. So 1% of 5,000 equals $50. So what this means is your R, your risk, every single trade you have, you're going to be risking $50 if you get stopped out. So given you get stopped out, price runs here, you will lose $50, okay? Now, our stop loss percentage here is 47%, 0.47%, sorry. That one there, that one goes there. And look, you can risk more. It's just depending on your risk tolerance, okay? So a lot of people recommend up to 3% you risk your account. I'm not going to tell how much you should risk, that's up to you, but the general guidelines are 1 to 3%. For educational purposes, we are doing 1% today, just to make it all easier. But anyway, let's do this calculation. We have our two numbers. Risk, we want to risk $50 each trade, and 0.47% we've gotten from our trusty trade tool here, from TradingView, 0.47%. Trade tool's down here, above the heart, okay? So click on that, long, short position, alright? Now let's do the calculation. Let's get our numbers. 50 divided by 0.47%. Okay, let's try that. 50 divided by 0.47%. What does that give us? 10,638. Alright. So what's that number? Basically, you've just calculated your required position size. Alright, so pop that one there. 10,638. Now, you can get to this required position size in a multitude of ways, alright? Whether it be 10x leverage on Bybit and risking $1,063.80. Okay? You put in $1,063.80 out of the 5,000 in your account at 10x. That'll get you to the required order value, okay? 10,638. Or you can put in $106.38 on 100x leverage. There's a common misconception about high leverage, guys. As you may have noticed, the stop loss percentage is calculated within our equation, and therefore it is taken into account. So regardless of any relationship between leverage and equity, as long as you're getting the required position size, it does not affect your loss. Okay, so whether you're on a 10x or 100x, if you get stopped out, you're only losing a maximum of 1R, $50. Okay, it does not matter. You'll see that in action in a second. As we go over to the Bybit, we'll actually put in the numbers. So hold on just a second. Let me log in first. Just made a new email and everything. Pop that one in. Cool. And okay, so cool thing about TradingView is you can copy the prices. So just right click here, copy price. Easy as that. I do believe Gene will be making a video running you guys through the tips and tricks of TradingView and really everything you need to know on how to navigate your way through it, just to really make nice clean charts and know all the tools you can use at your disposal, especially with indicators as well if you need, or even the magnet. You know, it's a lot of hidden cool things in the TradingView website. So now that we're in ETH on the 15, alright, let's put in some of our numbers. Okay, so we're anticipating a long, boom, stop loss there. Let's do the entry price. Sweet, and the take profit. Alright, cool. Now, in this box here, you want to choose order by value, okay? This is the required margin or the required position size, okay? So in USDT terms, obviously, this is the same thing but in ETH, alright? Don't want that USDT, make it as easy for yourself as you can, alright? So in this box, this is where you put the number you calculated, okay? So in this case, 10638 goes in there. Right now we're on 100x, okay. Just to prove a point. Our stop loss, let's see. Your expected loss will be 49 USDT. Even on 100x, you may say, oh, it's 100 times more loss. No. We've accounted that in the equation. Your expected loss is 49, okay? So we went to 10x. Bit of a more common use of leverage. Didn't change. 49, okay? So it does not matter. You've already accounted for it in the equation. Now we'll go back to TradingView. I just want to bring your attention to the risk reward ratio number, okay? As you can see, it's 3.54, and what that means is if price runs to your TP, so up here, you will make 3.54 times your risk. Okay, what's our risk? $50. So let's do that quick calculation. 3.54. Should be times 177. Alright, what does Bybit have to tell us? Take profit is 177. Okay, so it's all there for you. The one simple calculation, it's done all for you. Alright, so we do recommend using this. It's a simple way to make sure you're on track and managing risk appropriately. Alright, there is another thing I wanted to go over is drawdown management. Okay, so guys, if you're coming into the market and thinking you're not going to be losing or you're just going to be taking winning trades, you're in for a bad surprise. Alright, it's inevitable. Losing is inevitable, and it's just a tax on success, and until you treat it like that, it's very hard to be profitable and stay in the game. Okay, look, we here at the Linesman try to manage our drawdown as best as we can. This includes, I'll actually explain to you the simple process using a notepad. It's just easier. Say you were risking 1%, like so, $50, and you lose the trade. Okay, automatically for the next trade, you will drop your risk to $25. Okay, so that will be 0.5%. All right, that's your risk. Now, in order for you to get back up to the 1% risk you were originally at, so $50, you would need to make back half of what you lost. So when you traded with the 1%, you lost. How much did you lose? $50. You need to make half of that back. Okay, so you need to make an extra $25 back before you can return to your original 1% R. Okay, $50. Say you lost again. All right, your R goes down to $12.50. Okay. Now, in order to get back to the 0.5% you had, same premise. You need to make back half of what you just lost. So you just lost 25. You need to make back an additional 12.50. Okay. So that's one of the ways how we manage our drawdown. Once again, there will be a more in-depth video into this coming soon. More into establishing equity curves. So basically where you plot your account balance in Excel and create a line graph and basically track the price movements of that. For example, the benefits of that is, say you've won 5 trades in a row, you're on a streak, you're feeling good, and the equity curve, your line graph you've made in your Excel chart, it's just up, it's just gone up. Just like reading price, you'd expect and anticipate some sort of retracement. So, and those drawdowns do come, and you'd be surprised how similar the charts are. But anyway, we'll get into that in the next video. But yeah, you could anticipate some drawdowns coming. So what do? Decrease your risk at that top there. So therefore you're flattening your drawdown and you're decreasing the amount of risk you're taking on. Okay. Once again, more of that into the next video. But yeah, just a little insight there on drawdown management. Once again, losing, halve your R. Lose again, halve your R until you make half of that loss back. Then you can go back to your original R's. Okay. There is one more thing I wanted to talk about, and that's stop management. Alright, and I feel like TradingView will be the best way to show this. So we're using this theoretical trade here. Get rid of that. I'm going to fib the targeted range. By targeted range, I mean entry to take profit. That's your range you're targeting. Notice 50% here. So I entered here, got in on this candle. As soon as price trades up to 50% of the targeted range, entry to take profit, my stops are moved to either 25% or break even. Okay. Now I'll just inverse the fibs. Not that. I'll just inverse the fibs here. Say price trades to 75% of the range, say this level. Stops are definitely, without a doubt, moved to break even. Okay, we don't like trailing stops hardly because it is a volatile market, especially crypto, and you can just get wicked out by market makers. So just be careful of that. Trailing your stop loss too soon could result in you getting taken out before the real move happens. Okay, so we don't like doing it preemptively, and we wait for these two levels. So 50%, you can trail at 25%. Okay, 75% stops to break even. Alright, simple as that. Other than that, guys, I think that's all I wanted to show you today. Once again, you know how to find us. The link to our Twitter here is in the description below, and the link to our Discord, if you guys want to join up, is in below. It's free to join, and right now it's a tight-knit community. Look, we're just getting started, and we do appreciate all our early supporters, and there's a lot more content to come, guys, and we're just getting started. So once again, we appreciate you, and until next time, see you later.